Hello traders, it's Tuesday, December 16th, and we're about an hour and a half before the open. I want to hurry up and get this video done so that I can get it out before the open so you can take advantage of some of these picks. Big day yesterday. We had the FOMC statement and a huge market rally after that statement. Let me start off. I like to validate everything that I say, and I like to prove to you that this is actually what happened. Yesterday, my pre-open market comments, Fed day. So this is Wednesday. You can see these are posted at 8:18, about 12 minutes before the open. That's Central Time. So these are my market comments. We're going to go down to what I'm advising swing traders to do first of all. Swing traders should sell out of the money, bullish put spreads this morning. Focus on strong stocks that have recently broken through resistance on heavy volume and that are able to maintain that breakout during the market dip that we've seen. Okay, great. So yesterday morning, before the Fed, I'm telling members to sell out of the money bullish put spreads on strong stocks because I suspected that we were going to get a rally after the FOMC statement. So as we continue to scroll down, you'll see day traders. I highlighted a great trading scenario yesterday, which was fantastic. I was calling for a bounce and for that bounce to reverse immediately, and that's exactly what happened. So we made really good money on the downside, but here is how you should have traded the FOMC statement. So we're going to be dead to the Fed, so keep your trading light. We won't get a chance to trade until after the statement, but after the statement, if we get consecutive stacked green or red candles through the prior day's high or low, and they have little to no overlap, follow that direction. It's important that you have this exact pattern for at least 3 bars. If not, keep your trading light and expect volatility. So let's take a look at what happened yesterday. So we've got the FOMC statement coming out yesterday. Lo and behold, there's the FOMC statement. 1, 2, 3 bars with little to no overlap. That is a very strong sign. And remember, I said through the prior day's high right there. 3 long red candles stacked through the prior day's high. Get long. See ya later. Also, an excellent opportunity to sell out of the money bullish put spreads for swing traders. Take advantage of accelerated time premium decay. Focus on stocks that have been breaking out, like Pfizer. That was my pick of the day on Tuesday. Again, I did not do a video yesterday because I knew the action would be really slow ahead of the FOMC statement, so I thought I would wait and get one out early this morning. But that's the price action that we had Tuesday. You can see how PFE was a little bit higher on Tuesday, and then yesterday it just smoked higher. It went from about 55.50 up to 58.81. Super nice trade. All the stocks that I highlighted on Tuesday, go right down the list. Watch that video. Every single one of them did fantastic. I did not highlight a bearish pick because I felt the market was going to be moving higher. So let's take a look at that daily chart on PFE. Downward sloping trend line, broken to the upside, bullish flag formation. Boom, gone. So let's go in and take a look at what we've got lining up for today. Let me talk a little bit about the market. Let me talk a little bit about the FOMC. So the Fed came out and said, yes, we're going to have to accelerate tapering much faster than we had anticipated before because inflation is persistent. It is not transitory. Also, they're looking for possibly 3 rate hikes in 2022. That is much more aggressive than anyone was looking for. So why the big rally? Shouldn't that be bearish news? You certainly would think that just on the headline, this is bearish news. Well, the market has had a tendency to discount everything until it actually happens. So till we actually see the Fed tapering, we're not going to worry about it. Till we actually see the Fed tightening, we're not going to worry about it. Rally, rally, go mode. Realize that this is quadruple witching. So once you get the momentum established, then all of a sudden programs start to kick in and they drive the trading action because These firms are rolling their futures positions because the futures expire tomorrow. That's what a quadruple witching is. So there's a lot of activity and a lot of volume. There's also seasonal strength going into year end. Lots of reasons for the market to move higher, but I do feel that this move was a bit contrived, a bit fluffy because of the programs, and those programs could easily reverse. Do I think that asset managers are gnawing at the bit to buy the market at an all-time high with employment numbers struggling, with the Fed on the verge of tightening, with valuations at a 20-year high as far as forward PE? No, I really don't. So this morning we've got follow through and we've got an S&P rally of about 30 points before the open. That is going to take us up to that high at about SPY 473. I would be very, very careful buying this open. Could it be a gap and go? Could we see 3 long green candles right out of the gate, closing on their high with little to no overlap? We may. I'm not going to participate in that type of setup because I feel that the market is still vulnerable in here. I did not view yesterday's FOMC statement as bullish for the market. Also, any of these gaps to a new high have typically been faded, like that one, like that one. Anytime you get up to the high, you can see these red candles. So you need to be careful. Now, if the market rallies out of the gate, it pulls back, does not quite fill in the gap here, and then we start to find support, support, support. We stay within striking distance of the high. We start to have a compression in the first half hour to 45 minutes and support looks like it's forming and the bid has been able to hold, and then we start drifting higher, yeah, okay, I could get behind a move like that, but it will give me time, and that type of move might look like this. Get your early rally right here. Everything looks really good, but then we better test to make sure that buyers are still there. You get this pullback. This is the time that would give me an opportunity to find the stocks that I want to trade. Stocks with relative strength, heavy volume, breaking through technical resistance. This is very, very precious time. If you come in and you just start buying in here, all of a sudden you get this pullback and you start thinking, oh my gosh, is this one going to reverse like many of the others have? I better get out of the trade. I better go to the sidelines and I better wait to see what happens. So you don't need to rush in here and here. You don't need to have that worry here and here. You just sit and wait, watch for the prices to unfold, look for those really strong candidates. Then when you see a bullish hammer like this and a long green engulfing candle like this, then you know that buyers are still there and the market is going to continue to move higher. But until you have that support, I would not be trading the open. Take time, be patient. Your windows of opportunity will set up. Know that a lot of these gaps up to a new all-time high have been faded. They've pulled back. That's where your focus should be. So don't rush in. Here we go. Oh my God, all-time high. Oh, I gotta have it right now. I can't wait. And then you get the big letdown, and now you start getting shaken out of your positions. You get it stopped out. Worse yet would be ka-chunk, 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 gap reversal where you are trapped in the trade. So let's take a look at stocks that I think will set up today. I'm going to go in, run some searches, take a look at what we've got. PFE, obviously I still like it. Think it's going to continue to perform well. We'll go into heavy buying, and I am going to throw a short in there. We're going to find a short that I think you can keep an eye on today. It's not that I think the market is bearish, but if we get that gap reversal, you should have a long and a short ready to day trade right now. So we'll go in and take a look at some of the stocks that are coming up in the heavy buying list. By the way, I use Option Stalker. It's software that I've been developing over the last 15 years. It helps me identify relative strength and relative weakness. The whole platform is designed around that. Also, proprietary indicators, which I'll get into in a little bit. LOW, you can see stock with a strong head of steam, pulls back with the market. Big bullish engulfing candle. Very, very powerful candle here. This stock is probably going to continue to chase the high. I like it. I think it could be a good play. I'm just clicking through ABBV. You know, I've suggested that back in here when it was breaking out. So really nice. CNC. Been highlighting that the last 4 days. I love that breakout right in here. You watch my previous videos over the last week, you're going to see both of those symbols. Continue to go down. Still looking for something that I have not highlighted recently. And that was a takeover. I don't like bottom fishers. I like stocks that are in the upper right-hand corner. I've been mentioning that. Relative strength 30. Let's go in and see what we've got there. Again, very weak. Not looking to play bounces. I do like Lilly. I like this downward sloping trend line that was breached to the upside. And look at the strength yesterday on big volume. Check the news on this one because this is a news related move. You can see there is a longer term downward sloping trend line here breaching through horizontal resistance, new 52-week high. LLY could be my pick of the day, tends to be pretty choppy. You can see NVIDIA, I've got my alert line drawn right there on a GTC basis. I like the fact that it bounced off that 50-day. This is one where you can go down and sell an out of the money bullish put spread on it, something like the 260, 255 bullish put spread for $1 credit. Try and stay inside of 3 weeks. Think that could be a nice play. DHI, nice head of steam in here. A little bit choppy in here. Doji, some mixed candles, not a favorite for that reason. Microsoft still has some work to do. I like the fact that it's off this 50-day moving average. Bullish put spreaders could be selling premium down here below that 50-day moving average. I try to go down to maybe a 320, 317.50 bullish put spread. Do that for a 50-cent credit. That's a nice looking trade. Aim at. Take a look at that. Going to go into one more search here, see what else we've got popping on some of these searches. Qualcomm looks really good, but choppy. You can't count on it. Look at all these tails above body. As soon as the stock gets going, whap, 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 whap. Not my favorite, but if we can get through this resistance and stack another green candle on top of it, then that will tell me that the breakout is legitimate, and then I would be ready to join it. So that one also looks pretty good. Right now, I've kind of got to go with LOW. I think that one could work out really well. Going to continue to look and see what else we've got in here. I haven't checked. Now let's check the majors here. Google, Amazon. I don't think I've gone into Pop Bull yet. Let's take a look at that. Lilly, Costco. You know Costco's been on the list. Costco's got to be, it's been a pick that I've highlighted recently. Downward sloping trend line. Love this breakout. I did this a few days ago. Maybe I'll just repeat with Costco. I really like this stock. Amgen, not bad. You've got a little technical breakout here above the 100-day moving average, but it has been pretty slow to get going. So I think my pick of the day might be Costco, or it could be low on the long side. Let me think about this. I'm going to go with Costco. I just love the strength. We'll go into that 5-minute chart. What is relative strength? How does relative strength work? Well, let's just put up a 1 OSI indicator, orange line above 0, relative strength. Look at that strength. Breakout to a new high of the day. When the market was rallying, it was off to the races, but even showing nice strength before that. You can see relative strength early in the day before the FOMC even came out. So Costco is going to be your pick of the day. Can you sell an out of the money bullish put spread on it? Go into the daily chart. You can. I'd want to try and get down to this 530 level, but I don't know that you're going to be able to. You'd have to go a little bit closer to the money, probably here around the 545 level. So selling a 545, 540 bullish put spread for $1 credit. Yes, I like that. If you're day trading, I think this stock has lots of upside potential. Look for your opportunities once you get that market dip. So let's say that you're watching Costco and the market surges higher and you start seeing this orange line above 0, or you start seeing the stock perform well relative to the S&P 500, then you know it's time to take a position in that stock. So let's say that this is the opening move that we get today, and let's say that the market is pulling back, pulling back, pulling back, but you see Costco holding its own, doing this when the market is pulling back. That will tell you that this stock wants to go higher. Buyers are lined up. Typically, all stocks retrace with the market. When they don't, so market down, stock flat, ticking higher, you know that as soon as the market finds a bid, whoosh, that stock is gone. And if the market continues to pull back because the stock has relative strength, it tells us that buyers are lined up, that stock will be very, very resilient. It will hold the bid extremely well. That will buy you precious time so that if we get a nasty gap reversal down, 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 you'll have maybe 1 or 2 5-minute bars to decide to exit Costco without losing much, if any, money. You'll be able to get out of the trade, reevaluate the market, keep an eye on it, see when the stock and the market find support, and then get on board with it a little bit later. So that's your bullish pick of the day. Let's go in. Let's take a look at Pop Bear, see if we got anything interesting here popping up. Need to have a short that we're also taking a look at just in case we get that gap reversal. Want to start with a daily chart. Know that it's harder to make money on the short side because the market has been so strong. I'm trading half the size on the short side that I would on the long side. So you want to make sure that you're in those positions and out. You need that stiff tailwind. So MDT looked pretty good. Yes, this is a bullish hammer, but the only reason that the stock rallied off of its low was because of a strong market. MDT looks like a very good short to me. I like that one. I may not have to look any further, but we will. We'll go into heavy selling. Roku. Shorted Roku yesterday, did well with it before the FOMC. Same deal here. Bullish hammer. Can't get through that downward sloping trend line. Found some support here only because of market strength. CVNA, that's a nasty little, this is my pick of the day. Look at that. You've got these long red candles stacked. You've got a gap right in here. This stock is going lower. I don't think it's got great option liquidity. Had a little bit of a pop on the close yesterday. Long red candle stacked, very little overlap. CVNA, that's going to be my short pick of the day. You may only be able to trade stock. Keep an eye on Roku. I think that looks like a decent short also. And I know there was another stock, but it escapes me that I thought also might set up well for a short. MDT. That was it right here. So those are three that I would watch on the short side. But overall, my strategy today would be let the market rally unfold early on. Watch that pullback. See how much of the gap is filling in. Wait for that compression. Wait for that market support. While you get that little bit of a pullback, watch these strong stocks. Watch for that relative strength. When the market finds support, they'll take off. I would favor the long side today, but of course, be flexible. Start seeing those long red candles stacked on the open. We have a gap reversal. You want to make sure to take advantage of some of the shorts that I've highlighted. If you like this content, please leave your comments. Please leave your questions. I'll reply. They help me identify the types of topics that I should be covering in the videos. Trade well. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.